Luna 2.0 might crash, just like Luna Classic. Here's why. Terraform Labs, the company that created the coins Terra USD and Luna, which caused the crypto market to crash 2 months ago, has now created a second version after the first one failed. Critics and the people who lost their money in the failed Luna protocol are furious. The consequences of the two cryptocurrencies collapsing were terrible, not just for the people who had their money invested in them, but it literally shook the entire crypto industry. Their downfall resulted in a loss of nearly $500 billion in the larger crypto market. Countless investors had their whole life savings disappear in front of their eyes, and some even considered committing suicide, which we'll talk about later on in the video. It wouldn't be wrong for people to demand investigations into the project that's at the center of it all, as well as government control of the market as a whole. Let's talk about what's been happening in the crypto market surrounding Luna and everything that's going on around it. Let's get right into it. So what's going on with Luna? The most recent Luna news includes additional charges that Do Kwon took $2.7 billion from the Terra network before the Luna Classic crashed, lowering liquidity. Could it be true? Let's dig a little bit deeper and show you guys what we've uncovered. Do Kwon apparently used Abracadabra's degen box, a crypto borrowing protocol, to cash out funds despite the danger to the failed Terra and Terra USD, according to the mysterious Twitter account at FatmanTerra, who goes by Fatman on the Terra research forums. He also acknowledged at Fozzie Diablo, who discovered about $3 billion worth of the stablecoin UST being dumped on the market on January 29th. Just for context, the Luna disaster happened between May 5th to May 12th. The new Luna 2.0 coin's price action has been negative since the majority of the reports have been bad, to say the least, and there has been no meaningful Luna rebound yet. A hard fork established the new Luna, which became available for trade between May 28th and May 31st, depending on the crypto exchange it was listed in. The latest Luna developments follow claims that Terraform Labs workers revealed to the SEC that Do Kwon took $80 million worth a month before the Luna and UST crashes. As FatmanTerra points out, $2.7 billion is a little more than a month's worth of daily withdrawals. Do Kwon is also being investigated by the US Securities and Exchange Commission. The SEC is said to be aware of hundreds of crypto wallet addresses and a trail of Terra business cash being transported abroad, and is investigating the withdrawals as money laundering and a violation of the Securities Act. The inquiry is still underway, and Do Kwon is yet to be prosecuted because he rejects the claims against him. More on that later. Let's stick to Luna 2.0 for now. So what is it? What's Luna 2.0 all about? The team behind the failed coins is now back at work. Terraform Labs, the company behind Terra USD and its sister cryptocurrency Luna, both of which have lost virtually all of their value, began trading a new digital token called Luna 2.0 as part of their revival strategy. Do Kwon, the creator of Terraform Labs, stated in his plans to introduce the new coin as a chance to rise up anew from the ashes. Dramatic much? The coin, which trades under the ticker sign Luna, replaces the existing Luna cryptocurrency. Investors who lost money on Terraform Labs' past coins could be eligible for free tokens depending on a ratio set by the business, but that's still not exactly set in stone. The original Luna currency is still available for purchase, but it's now branded as Luna Classic and known as LUNC on crypto exchanges. The new Luna coin has had a difficult start, to say the least, losing nearly 75% of its value in the first few hours before recovering part of it later, but it still wasn't enough. In mid-June 2022, the new coin was trading at $2.48. Still, despite its ups and downs, cryptocurrency analysts, investors, and critics have trashed Luna 2.0. They claim that it reveals a larger problem with the cryptocurrency market, where companies have the ability to offer whatever they want without the fear of regulation or enforcement, putting average investors at risk. It's always the little people who have to suffer the consequences, right? But how did Luna and Terra USD crash? How did Luna 1.0 crash? Well, Do Kwon, a Stanford University-trained engineer, founded Terraform Labs in 2018 with the goal of transforming contemporary financial systems, and he launched the Luna cryptocurrency in the same year. The project began selling Terra USD in 2020, referring to it as a stablecoin. Ironic, right? The value of stablecoins are usually linked to a safer asset, such as the US dollar, but it didn't work the same way with Terra USD. At first, people were skeptical, and experts believed Kwon's Terra USD was a riskier project than other stablecoins on the market because, unlike a usual stablecoin, it didn't have a reserve asset like cash to back it up. Instead, it used a mechanism linked to the supply of Luna currency to keep its value at roughly $1. The Luna cryptocurrency surged in value for a while, even developing a community known as lunatics, which in hindsight doesn't look too great now. It was worth slightly more than $116 in early April. But cryptocurrency traders began selling Terra USD in large numbers in early May for some odd reason, leading it to lose its peg to the dollar and spiral Luna's value out of control. The value of Luna and Terra USD continued to fall, eventually losing $60 billion in value and generating over $500 billion in losses to the cryptocurrency market, according to industry statistics. Many investors were enraged, commenting on Reddit, Discord, and Twitter about how they had invested all of their assets into Luna and Terra USD only to see them vaporize in a matter of days. According to reports in the Taiwanese media, a man even committed suicide after witnessing his $2 million in Luna currency sink to a mere $1,000. Despite that, Terraform Labs revealed its plans to establish another cryptocurrency as part of its revival strategy in mid-May, despite extreme scrutiny from lawmakers and crypto industry experts. Terra's recovery hopes were negatively affected when the newly released Luna token fell. There was a knee-jerk reaction to the Luna 2.0 tokens that were released over the weekend after the launch. The coins were launched for $17.8 according to CoinMarketCap statistics and finally soared to $19.53 on May 28th. On May 30th though, it dropped almost 70% to $5.54 in less than 48 hours. Investors have clearly lost trust in the Terra ecosystem, and a simple change in their blockchain without addressing the core cause of the disaster won't help Terra rise from the ashes, as Do Kwon wants it to. Because as a result of the Terra Classic blunder, investors have completely lost interest in the coin. It's done for, nada, gone. Conclusion. While several exchanges have started trading the new coin, Luna's current trade liquidity is restricted by its airdrop and vesting schedules. As a result, high volatility in trading prices is predicted in the coming months. Before starting a long-term trade, we recommend that you wait for market equilibrium and stability. To put it another way, short-term betting should be avoided at all costs. Luna 2.0 isn't even in the top 2,000 cryptocurrencies by market capitalization, making it extremely risky. Investing in crypto assets should always be limited to the top 100 names, with a larger weighting in crypto projects that are supported by well-known industry leaders. Luna faces an unpredictable future, and investor disappointment might make algorithmic stablecoins obsolete after what has happened. It's likely to follow in the footsteps of other unsuccessful algo stablecoins such as Basis Cash and Iron. Terra's first native currency, Luna Classic, saw its algorithmic stablecoin USD Terra depegged from its $1 value, causing a huge loss of wealth in the crypto markets. Lunci is presently asking for fractional cents of $118 at its peak. When it comes to the investment, the project's stability, tokenomics, and positive factors must all be considered. Trust is at the heart of every financial system, but before investing, one should always do their homework carefully so they don't lose money like many did with Luna Classic. If you found this video helpful, be sure to subscribe to our YouTube channel for future videos. Join the conversation in the comment section below to tell us what direction you think Luna is headed in. Luna might be a risky option to go for right now, but consider checking out our upload on Bitcoin casinos, since Bitcoin is the top dog in the crypto market right now.